Hey everyone, welcome to your week 19 crypto market analysis. First off, happy halving Bitcoin fans. On Monday, the big moment finally arrived. For the third time in Bitcoin's history, the mining rewards fell by 50%. One man who is certainly bullish is Tudor Jones, widely considered to be one of the best macroeconomic traders ever. Jones told investors last week that he sees Bitcoin as a global hedge. Could this be an indication that real institutional money is about to hit crypto markets? Let us know what you think in the comments. For the price analysis in the short term this week, we saw Bitcoin increase $1,000 on the 7th of May before hitting resistance at the $10,000 zone. This led to a healthy retrace and hold at the previously mentioned $8,000 mark. Here, BTC was met with healthy support in the form of increased trading volumes, which helped drive the price back into the $8,500 and $9,000 range. Generally considered a healthy indicator for an upward trending market, retraces like these can often help maintain momentum by providing new entry points for late arrivals. However, time will tell whether the BTC market will take advantage of this. For this to happen, we'll need to see Bitcoin overcome the psychological barrier of $10,000 and pass its February high of $10,500. If this doesn't happen though, the $7,500 to $8,100 zone is still very much in play when looking towards short-term support levels. Long-term, volatility is seemingly here to stay, with the 7-day volatility last week reaching levels not seen since March. Bitcoin ended its streak of 7 green weekly candles, closing the week $100 below where it started, in spite of a strong rally up towards the $10,000 mark, with price trading in range nearly as wide as $2,000 over the course of the week. Following the halving, it'll be interesting to see how the volatility evolves this week. Bitcoin volume has remained high. The 7-day average real trading volume spiked above $2 billion last week as the volume holds strong. It'll be interesting to see if the volume could continue to hold at these levels, or if we will see the same kind of drop downwards as we did in March. Yesterday's daily volume crossed 3 billion for the 6th time in 2020. And now for my favorite bit, this week's reasons to be cheerful. There's been a lot of chatter in recent weeks about the high correlation between Bitcoin and the stock market. This has been a source of concern, with the global economic landscape still very fragile. However, with the stock market relatively flat in May, Bitcoin has surged, suggesting that this could very well be the moment of decoupling. Last week, the crypto market got greedy, but fell back. The Fear and Greed Index continued to climb last week as the momentum looked strong. After pushing above 50 and entering a greedy state, the index fell back after the pullback this weekend. We're currently back in fear and the index is at 40 again. In some really exciting industry news, the trailer for Banking on Africa, the Bitcoin Revolution, has finally landed. Follow Bitcoin pioneers from across Africa as they fight to bring this revolutionary new technology to the masses and transform the country's financial systems. Supported by Luno and produced by an award-winning production studio, Documinute, Banking in Africa, the Bitcoin Revolution arrives on Amazon Prime on the 22nd of May. You can check the trailer out in the meantime over here. That's all for this week. Thanks again for joining us, and don't forget to like, subscribe, and as always, to the moon.